Hello, ladies and gentlemen. Greg McCloskey from ForexLive.com. Mr. Forex Quick Look. We're going to take a look at the sterling versus U.S. dollar. The dollar is moving a little bit higher over the last few hours of trading. Why? Because better data of the U.S. has forced it back to the upside, and there's some feeling that maybe the 50 basis point is a little bit too much, with GDP estimated to be close to 3% in the third quarter. Let's talk about it in this video. Yes, that's right. The Atlanta Fed GDP now estimate for third quarter growth is now at 3%, up from 2.5%. In addition to that, Goldman Sachs raised their estimate for Q4 growth, or Q3 growth, to 2.8% from 2.5%. So 2.8%, 3%, pretty strong growth for the third quarter. Does the Fed have to cut rates by 50 basis points with such an environment? Probably not. As a result, we're seeing the two-year yield move up about 5.5 basis points. The 10-year is up 2.6 basis points. Some of the stock gains are also being eroded after the S&P index went and traded to new intraday highs. It is now up only 7.7 points for the 500 index. The NASDAQ index is up 0.31%. Both are all well off their high prices. Looking at the sterling versus U.S. dollar, technically, and we talked about this in the morning kickstart video, this area up through here did hold resistance. This area came between the 1.3221 and 1.3230 level, and in the Asian session, the price came up toward it. In the European session, the price moved into that level and then rotated back to the downside. We had the data come out, and we've seen continued selling in the New York session as London traders headed for the exit. Now the price is back down toward this cluster of moving averages. This moving averages are defined by the 100-bar moving average on the 4-hour chart at 1.3146, the 100-hour moving average at 1.31325, the 200-hour moving average at 1.3124. So between 24 and 46, there's a lot of support that we're moving back down toward, and that should give traders cause for pause. It's also somewhat near the middle of this trading range that has been in play since, I guess, going back to this day around the August 20th area, with moves to the upside, moves to the downside, and then moves to the upside here. So that would make sense going into the FOMC rate decision, moving toward that midpoint, let the decision decide whether the dollar goes lower, the dollar goes higher, or do we just head to the extremes and trade that extremes going forward. But this area right here should still be a level of support for the sterling versus U.S. dollar as the dollar gets stronger, moves away from the highs as we head closer and closer to that key Fed rate decision tomorrow. My name is Greg McCloskey with a technical look at the sterling versus U.S. dollar. Good fortune with your trading. Bye-bye now.